Hi all, and welcome to another video of our educational series here on TCM. Yesterday it was a very bad day for Tesla and Elon Musk. His spat slash feud slash debate slash fight maybe with Donald Trump ended up costing him a lot. Again, I don't know if it cost him a quarter of its or 14% of its total net worth or less. None of our business. Our business is to analyze the possibility of getting on board with a Tesla trade short, or in this case I'm analyzing the ETF TSLL, which is way easier to analyze because I don't have to deal with $300 mega mover and talk about slippage and spreads, and this is easier to decipher. But the chart is 100% the same chart. There's no difference between the charts. The only difference is that Tesla is now at 284 and this one is at 9.8. Tesla trades millions of shares. This one trades way more. Spreads in Tesla vary between 5 and 10 cents. This one has a 1 cent spread, so its liquidity is way better. Okay, and the drawback or the benefit is that you get on board with the trade. Percentage-wise, TSLL is going to move twice as much percentage-wise versus Tesla. So if Tesla dropped yesterday at the close like 14%, this one is, as you can see here, closed down 28.5%, meaning Tesla basically was in the ballpark of 14.25. Okay, so let's analyze what happened here. So this feud between Trump and Elon Musk started a couple of days ago. Musk didn't like the tax bill. You can see the gap down. And we opened lower, or not we, Tesla, in this case TSLL, opened lower. Then it moved and created a low above 12. Let me highlight this low, and I will highlight the round number. Actually, the lows of this bar here, let me see what were exactly the lows. It was low 1209. Okay, 1209 lows of the day, and then the stock reversed and traded higher. I don't have the chart of the S&P or the Nasdaq. Probably that was the reason. And then broke the lows, and then the things got heated up. Now keep in mind, at that point in the market, the overall market was positive following the, let's call it the, I don't know if it was a phone call or a Zoom meeting or whatever it was between Trump and Xi Jinping. That was a boost for the markets in the early session. So Tesla is moving lower, totally counter market direction. Then it creates a new low at 1209. Then it starts to move higher. Now let's see what can you do as a trader. If you, for whatever reason, and I don't see it basically on the chart, looking for a short trade, where would you enter? I mean, there are a couple of options. The best one obviously is here at 1270, and then you have a stop loss over 13. That's a 30-cent risk on this trade. Let's highlight. This is pretty much the trade, anywhere between 1270 and 13. Okay, this channel is the risk. Now this is an amazing trade if you get on board under this consolidation and you guess that the stock is going to move lower. But let's face it, the technicalities of this trade are kind of pointing to some type of a uptrend here, a minor uptrend. And again, you don't want to trade Tesla basically against the trend of the Nasdaq or the New York Stock Exchange, and that trend was at that point very positive in the markets. Now, let's see. You know that Tesla is way weaker over the last 3 days than the rest of the Nasdaq, definitely from the rest of the SPY. So it's a possibility. What are other possibilities to enter on board with a short trade? The lows of the day is always a possibility. In this case, this is the entry 1209. But if you enter the short at 1209, where is a reasonable stop loss? The VWAP, the highs of the day, almost the highs of the day at the 13. So you cannot trade $12. Let's treat it like a regular stock with a $1 stop loss. That's suicidal. So you need to trade it with 2% stop loss, maybe 3, because it's a leveraged ETF and requires more space and can move very fast. But you definitely cannot trade it with 8 or 9% stop loss. So the short at the lows, again, another question mark. Now the trade at the VWAP here, I don't know, that to me doesn't show any viability. It's not viable technically. So we stay with the assumption, and that's what makes this trade so complicated and hard to reach. That you need to get on board at 1270 short, risk 30 cents, and it works. Now, what are the other possibilities? Assuming you don't want to trade the short play here at the lows with a big stop loss, can you get on board on this downtrend and follow the trend? The answer is yes, you can, but when you always get on board on such a strong move lower, take a look at the potential pickup in volumes, which is this move lower. You have a problem of timing and of risk. What happens if you enter, for example, here versus if you enter here at 12? So if you enter at 12, at least you know what is your stop loss around, in this case, hold on a second, 30 cents, maybe 35 cents. Looks steep, but it's possible. But if you start entering on the way down and end up entering at 1160 or 1130, then again you don't have a clear view of what's going on. And any reversal, keep in mind this is only an $11 stock, but the volumes are a factor here. Something's definitely going on. So if you don't enter at the right place at the right time, a great downside move can turn against you and create a loser. That can happen. I mean, in this case, the reversal was only 40 cents, but 40 cents is a lot on a $12 stock in terms of percentages. So what can you do? Basically, the right play, if I'm looking at the technicalities of this trade, is this 1120 breakdown at the lows. It had two features that were positive here. This triangle breakdown, you can see it here, the triangle breakdown, and let me post it again. The triangle breakdown and a relatively tight stop loss. And now, by now, you have established a clear downtrend. This is a very late entry, and by a mirror of luck, that's like, doesn't happen very often. How often Tesla drops 20% intraday, then it recovers 5%, but Doesn't happen very often. And so this trade under from 1120 down to under 9 was basically the money trade, and it could have been traded because of the technicalities of the move here. That's what I think. I mean, everybody, like I said before, you have 10 traders, you have 11 opinions. Everybody trades different, with different quantities, with different strategies, with different logic. I'm sure that there were people that were actually longing Tesla, many, that got on board thinking they're gonna buy it cheap, and ended up having smashed here. Now at the lows there was a signal for a reversal. You can see these three hammer reversals at the lows. That was below 9 already, and it reversed more than $1 very, very fast. Now, sorry, I forgot to tell you guys, each bar on this chart is 3 minutes, not 2 minutes. Each bar is 3 minutes. Why Momo uses this 3-minute strategy, or I don't know. I couldn't switch it to 2 minutes. There's a 1-minute bar, not very comfortable to trade. 5-minute, very aggressive for day traders. I know many trade with 1 minute, many trade with 5-minute bars, so not gonna dwell on that. So that's pretty much what I can say about this chart. I mean, I see one. Sorry about that, but that's what I see. This viable as viable trade because of the technical pattern, because of the established trend, because of the managed risk. Now, how many expected a move of $2? No, I don't think this is an unsustainable type of a move that happens once a year and won't repeat itself. That's why I don't think there's a lot to learn from this event. Although if you are on board with this event and you make money out of it, you think it's going to repeat itself. I don't want to say that I guarantee it won't, but highly unlikely that it's going to repeat itself anytime soon. But who knows, with Elon Musk being so cranky and unpredictable, I mean, he doesn't care if he loses, I guess, 100 billion or whatever he lost yesterday. Okay, guys, that's enough with this chart. Please share this analysis with your friends if you like, and we will see you in our next video.